Thank you so much, Abu Dhabi chapter of ICAI. Thank you so much for inviting me here. And Ankit, when your poll was going on and the question came about the markets, and the correct answer was diversification, right? 71%. Timing matters a lot. 6 months back, if you had asked the same question, diversification would have been at the bottom of the chart. At that time, nobody wanted diversification. At that time, everyone wanted just one stock. Just एक stock बता दो मुझे, जिसमें बस पैसा लगा दूँ. So anyway, things have changed a lot. We'll try to keep this session a bit interactive. So how many of you invest in stock markets? Okay. And how many of you are in long-term investors? And how many of you are traders? Okay, there's no shame in being trader. You can say that. Everyone is a trader at heart. How many started as trader but became investors because of the market? That is it. Actually, 90% of the people who are investing in markets are also traders. It's just that, sometimes we don't want to accept it, right? But trader is a very big community of the market and a community which should be respected, because if traders are not there, investors would not get their price. So traders do deserve a lot of accolades in our market. Anyway, let's move on. And this is our presentation. I made this presentation because of what has happened in the market in the last 6 months or so. So I think just want to put this together as a bit of an advice in terms of what one should be doing right now. Because everyone's talking about the market has crashed, the market's fallen so much, what to do, my portfolio has taken a big hit, and what to do. I think a lot of this is happening because a lot of new investors, young investors, Gen Z investors, a lot of the money which came post-COVID has actually not seen markets go down. They think that the market will only go up. And market is like some kind of ATM machine where you go, put your card, and by the end of the day, you'll get your money. Now, I'll go through what I believe was India's biggest bull market, which is not the current bull market. India's biggest bull market was 2003 to 2008. For those of you who participated in that market would know that and would vouch for that. So what happened in that market, 2003 to 2008? So the Nifty went up from 900 all the way up to almost 6,000 in 4 years, right? That's almost 7 times returns, which is what this bull market has not yet given, if you take the starting point even from the COVID lows. So that was really the big bull market. But you know what you notice is, one straight line. But within that, there were so many jagged edges. Just look at this, for example. This line. Now, this phase, right when the bull market started, before that. This phase. A lot of us have forgotten about this. I have also forgotten about this. This has been the Atal Bihari Vajpayee government lost, right? 2004. Market had a down circuit. This is 2006, which is the time when crude prices had gone through the boil and we had seen that big decline. This was the global financial crisis. I think almost, not exactly the global financial crisis, but just before that. So this glorious bull market had at least 4 instances of 15% drawdown or more. And we have had the first instance of 15% drawdown in this bull market, and everyone is panicking. 4 drawdowns of 15% or more. One of them was 30%. The one after global financial crisis was 58% from the top. And in this bull market, we've seen one correction, and all of us are worrying about the market as if some, hell has broken. Now, other point I want to talk about is what's happening in the market. Everyone wants to invest in large cap or mid cap, small cap, micro cap, bhangar cap, as some of the guests call kachara cap. So, I'll just give you one example. This is when the bull market was at its peak around 7 or 8 months back. And I was very nervous about the mid cap and the small cap end of the market. I made this point. Look, this is even after the correction. Even after the correction, what do you see? The line in orange is the Nifty mid cap 150 price to earnings. The line in the blue is Nifty 50 price to earnings. And the line in the green is Nifty small cap 250 price to earnings. The Nifty should be on the top. It's on the bottom. That's what was worrying me, and that is what still worries me. That even after the fall that we have seen, the mid cap and small cap valuations are still very expensive. Coming back to the story that I was telling you, this is when that orange line was right at the peak, and look at the gap between orange and the green and the blue. I got a call from my society chairman. He said that, our security in charge is retiring. He wants to meet you. He wants to know how to invest his retirement corpus. I said, okay, fine. So I met him. He said, sir, I want to invest for my daughters. I said, how much money you have? He said, sir, around 30 lakh. I said, okay. I said, so when will you need this money? He said, sir, in around 6 years when my daughters will go to college. Looked good, okay? I mean, everything till now is sounding really good. Then I asked him, okay, so how much do you expect this money to do, to return? How much returns do you expect? He said, sir, 15%. I mean, I was saying, okay, 15% maybe slightly on the ambitious side. If you would have said 12, 13%, it would have been still okay. But 15% is still okay. I mean, in stock markets, you can, if you say 15% per annum, it's not outlandish, right? I said, okay, look, it's tough to give you 15%, but we can try. 15% per annum, you can, even in the Nifty ETF, you invest, including dividend and all, you'll compound your money by 13, 14%. So we'll just have to navigate a bit and you'll get to 15%. That's where he stopped me. He said, sir, sorry, I should have been clear. I said, yes. He said, sir, 15% per month. So, okay, I was stunned. I said, sir, if you come across someone who can give you 15% per month, I'll be the first client. Because it's impossible to deliver. But the fact is that that was the kind of the market in which those returns people were expecting. Large part of what has happened in our market is FIS selling. Just go through what has happened in 2025 so far. FIs have sold 1.2 lakh crores of Indian shares. But you know what? Almost every penny of that has been bought by domestic investors, retail and DIIs. And I think which is a big testament to the fact that Indian market is now much more stable, even though it might be underperforming right now. But at least the kind of volatility that we used to have because of the FIS selling, at least that will be something which will get reduced over time. It's already reduced. Yes, the market's down, but it's no longer as volatile as it used to be. But you know what? This is the problem. Everyone is saying that FIs are selling because they are selling across emerging markets. That's not the case. Or that they're only investing in the US. That's also not the case. I mean, look at year-to-date data, and this is the data that I've sourced from Bloomberg. They've invested $9.6 billion in China. Chinese market has attracted. When Donald Trump became president, everyone said that it's going to be at disadvantage China and advantage India, right? Well, that's not how money saw it. Money actually moved to Chinese market, and Chinese market has seen a big rally. France attracted $32 billion. Look at the French market this year. It's on a tear. And even something like a Brazil has got $1.5 billion of inflows. And it's not as if, all these currencies are doing well. I mean, yes, our currency has fallen, but it's not that, our currency is the one which has fallen the most. Almost every emerging market currency has fallen. So there's something which we are doing wrong. The first thing in correcting is admitting that you're doing something wrong. There's something wrong in the Indian market in the last 6 or 7 months, and that is the earnings growth. I'll come to that in a bit, why that is important. This is what I was talking about. So in 2025, MSCI China has given 13% returns. Its PE is 12 times. Europe has returned 9%. Its PE is 15.5 times. Brazil has given 15%. We're talking about just 2 months, okay? January and February. And Brazil is at 9 times. Germany, 12%, 16 times. Korea, 11% returns, 11 times the price to earnings. India is minus 5%, 24 times price to earnings ratio. Japan is minus 2%, 15 times price to earnings ratio. Japan has its own problems in terms of its population, and we know that. Now, a lot of you would say that India has always been expensive. And that is exactly the point I was trying to make. We've always been expensive, but we've always commanded that premium because of our earnings growth. I don't recall when was the last time when we had so many successive quarter after quarter of earnings downgrades. We reached a stage where something like an Asian Paints actually declared degrowth in earnings, which is something which nobody thought could ever happen. But that's happened in India. That is a fact. We have to understand that. This is how some of the other markets have moved year to date. Now, this is where it gets interesting. Again, FI net purchase and DI net purchase. FIs obviously are on the sell side. And FIs have actually sold, I'm talking about the secondary market, in all of last, or majority of last decade. Why is it that only this year it's become crucial? This is actually month-to-date data. This is monthly data. But even if you look at the yearly data, that's where a lot of money has come from retail. This is the SIP. Everyone talks about SIP, right? Just look at this number, 26,400 crore. Just to put things in perspective, few months back or few years back, this number was 6,000, 7,000 crores a month. We moved to 26,400 crores. So the Indian money is intact. It's just that the FI money is completely deserted us. Okay. Now, this is the last point of my first presentation. I have 2 presentations for you today. So this is the last slide of my first presentation. Everyone says invest in blue chips, right? And you can't go wrong. Just invest in blue chips. Just invest in blue chips. But you know what? It's easy to say invest in blue chips. Because how do we know that the company which is blue chip right now will 20 years down the line still be a blue chip? I mean, look at the original Sensex 30 components. There are only 6 or 7 which are still there. The rest all have vanished. Any guesses? This once was a Nifty stock. Airways. Right? Nifty stock, everything going for it. What happened? Stock became zero. Unitech. Once was a Nifty stock. You know how much it fell from peak? 99%. At that time, absolute blue chip stock, right? Nothing could go wrong against Unitech. This one, Suzlon, right? Mr. Tulsi Tanti, of course, no longer with us, unfortunately, and now his family is trying to revive the company, and I'll be very happy if that, if that revival is complete. But also, again, blue chip stock, FI investment, mutual fund investment, everyone invested. What happened? And last, any guesses? Yes Bank said no to happiness. Again, Rana Kapoor, a lot of big FIs investing in it. All these things happened, but nothing happened. And one last thing. Have you heard this line again and again? Time in the market is more important than timing the market. Whenever I hear that, I feel like taking my cricket bat and just smashing that person. Because you know what? It's something which lazy fund managers use on television channels like mine. Come and say that we are in it for long term. We are cautiously optimistic. It's like an oxymoron. So, can you guess this stock? I'll give you a hint. It's a very famous textile export company, which when it came with IPO, it was supposed to be India's next big thing. Gokul Das Exports. What happened? Who was this? Who was this? Who got this right? Wonderful. So, did you have it? Okay, now I know. So Gokul Das Exports came out with IPO somewhere around 2004 or 5, around 300 rupees. You know what was the price in 2018, 2019, 2020? Let me not go into the COVID period. What was the price in 2020? $50. Now someone is holding it from 2004 to 2020, from 500 the stocks down to 50. He sells out, someone sees an opportunity, buys it there, and in 3 years, boom, from 50 to 1000. Now tell me, does timing matter or not? Of course timing matters. So it's, I mean, there are always exceptions, right? You can say that this was maybe an exception. But why I'm putting this example is that even if you have something in your portfolio, even if you're a long-term investor, you want to keep looking at your portfolio stocks and see that whether that stock deserves to be in your portfolio or not. Thank you for listening. This is, as I said, just the first part of my presentation. The second part of my presentation, because soon I'm going to start some Q&A, I'm going to make it a bit interesting. This is, right now everyone talks about memes, right? Stock market also has a lot of memes. So first of all, standard disclaimer. Can we have the next presentation? Standard disclaimer. I have put all these from the internet. So all the spelling mistakes, all the grammatical errors, they're not mine. So forgive me for that. But it's just that I like the content, so that's why I lifted some of these slides. Okay, so this is traders versus insiders. What do you see? This is the success rate of a trader. He has fired, I think, 40 bullets. None of them has hit the target. And this is what when an insider fires. One bullet straight to the target. So that is what happens in the market. This is how India's stock markets work right now. Everything is on WhatsApp or Telegram. You ask for where did you get this research from? I get the answer, sir, वो WhatsApp group था, वहाँ से उठाया. And I wonder, what is happening? Should I get a new team or something? Okay. Now this is the market which is where a lot of people are shorting. You short the market and next morning you look at the gift nifty. This is how you feel, right? And this is what, how many of you make money by shorting the market? That's what I'm saying. See, it's very tough to short the market and make money, but markets made a lot of money for those who have shorted. And I think markets clearly told you once 25,000 was broken that it's now a shorting market. To short the market and make money. That's where I really loved Rakesh Jhunjhunwala. I really miss him a lot. He would have Titan in his portfolio, but he would short the hell out of it during the bad times. He didn't care. His portfolio position is intact. But if he could see that there's an opportunity to make money on the short side, he'll do that. So that's why in India also, it's important to keep holding your stocks, but the market's giving you an opportunity to make money on the short side, take it. There's nothing anti-national in selling stocks. I hear a lot of people, on channels say, how could you short Nifty? That's taking a bet against your country. That's not how markets work. So whenever you see a big trader or an investor and he tries to present from the outside, when actually from inside, that's how the market makes him by the end of the week. This is important. This I think is very important. This is where a lot of people go wrong. In constantly trying to find new multi-bagger, you often just when your stock is about to become the big multi-bagger, you move to the other stock. You can see that? This guy has taken a small diamond. This guy was about to get the biggest diamond, but he thought that, okay, maybe he's digging wrong. He came on this side, and then he missed his diamond. This is what option trading does to your bank account. This is beginning of the month, and by the end of the month, that's what you're left with. This is when you put a target price, it never hits. When you put a stop loss, almost every stop loss is hit. Okay, this is what I was saying. Tell the difference between trading and investment. When you are making a loss, make it as investment. And when margin call is triggered, then you end up selling your best investments. That's what happens to a lot of people. Eventually, you end up selling your good stocks because you want to make up for the margin on the poor quality stocks that you initially started as a trading bet, but became your investment bet because you had no other option. You know, sometimes markets bottom out when best quality stocks start to fall. That's because that's when the margin trading stop losses start to get hit. Okay, so that's all from me. I won't bore you with any more slides. And if anyone has a question for me, I'm all ears. And a disclaimer, I'm not going to tell you the 5 stocks to buy.
Thanks for an interesting presentation. How do you see the markets behaving in 2025? And General Saab was saying third world war is coming soon.
Can you be a bit louder? I can't hear you.
I'm saying, how do you see the markets behaving in 2025? And if Bakshi Saab is right, he's saying World War III is going to happen. So what should we do?
War in next 3 years.
No, he was just mentioning in his presentation that World War III may happen.
World War III may happen.
Yeah.
Okay.
So
Yeah. First of all, General Bakshi, honored to be here, sharing the space with you. वर्ल्ड वॉर 1 और 2 में क्या हुआ था मार्केट में? I heard the question. Okay. So, see, I'll tell you one thing. You never know what will happen, war will happen, COVID will happen. As an investor, it's impossible to predict that. If World War III happens, we'll have bigger worries than stock market. Okay. So I'll tell you, there was when this, I don't remember, I think it was Cuba or some other country, I don't remember the exact story, which is where there was a threat that US is going to invade that country. So there was a great fund manager, he picked up the call and he told his dealer that buy as much as you can. He said, but sir, there's news that US is going to invade us tomorrow. He said, if they invade us tomorrow, we are all dead. It doesn't matter. What if they don't? We're getting stocks 40% cheaper. Let's buy them. So same thing happened in COVID, right? Everyone thought humanity is going to disappear. That's when you got the prices. First of all, I wish the World War doesn't happen. I really wish, because it's not going to serve anyone any purpose. A lot of people believe that a cold World War III is already happening. So, but none of us knows that. None of us is an expert in terms of war, except of course General Bakshi. But none of us has seen previous World War and how the stock market reacted in that. So I think it's best to not think about those. Anyone else? Yeah. Expectation for 2025. लास्ट 3 साल में ना मैंने एक चीज सीख ली है, नेवर हैव एनी एक्सपेक्टेशंस एंड यू विल बी हैप्पी. स्वामी जी सही बोल. एक्सपेक्टेशन होनी चाहिए कि 2025 में अगर मेरा पैसा नहीं गया तो बहुत अच्छी बात है, पैसा आ गया तो बोनस है, पैसा आ गया तो बोनस है. 2025 has shown signs that we are in a classical bear market. And it doesn't look like it's going to end soon. I think at least till June, July, the market's going to stay like this, maybe even fall a bit more. After that, maybe there can be some recovery. My only problem is, I believe in data which I can see. The hope is on data which we have not seen. Everyone is talking about earnings recovery from Q1, Q2 of next year. When that happens, we'll see. I firmly believe either I'm a disciplined SIP investor who will keep investing with the trust, with the knowledge that if you keep doing that, whenever the market goes up, you'll make a lot of money. Or if you're not that kind of investor, it doesn't matter if you buy 10% higher, but you buy it when you start to see evidence. So start to see evidence that the market's actually bottomed out. And this is where I don't want to actually recommend 5 stocks or 10 stocks, because trust me, a lot of stocks might fall 40% to 60% even from these levels. Even from these levels. This is a story which has happened again and again. Many of the IPOs, and 90% of the IPOs are really poor quality IPOs. I firmly believe you should never invest in an IPO, because an IPO, or especially offer for sale, is something in which someone is coming to dump stocks when they've already made 5x, 10x, 20x, or 100x. Hyundai was the classical example. Why did they need money? They didn't need money, right? They just thought that, okay, the market is ripe, let's just take our money home. So to give a short answer, I have no expectation from 2025. I'm going with the fact that if we even end the year here, we'll be fine. Okay? Thank you. Cannot. That is what's happening in the market. So now we are not at 25 times actually. Now we were at 25 times when we were at 26,000. We have now fallen to 23 times. Because, yeah, looking at the trailing number, forward number, we are already at 19 or 20 times. But then again, this forward number might have its own risk. There could be more downgrades. You never know. Can you have the mic, please?
Yeah, thank you for a nice presentation. Do you see any opportunity in other markets apart from India?
In other markets? Sorry, in other markets?
Yes, yes.
Absolutely. I think China is right now is the best market. I think China, Hong Kong. I think I'll just give you how cheap the Chinese market is. Chinese economy is same size as US economy. China's weight in the MSCI global index is some 7%. US is 70%. I mean, there's no surprise that Chinese stocks have started to generate the kind of returns that they're generating. And stock market is a very interesting mechanism. The Chinese market till now was underperforming because at the back of its mind, somehow it knew that Donald Trump would be the president and he'll come into with this stance of tariff and all. But Donald Trump actually does not hate China. He just loves US. And that's how any president should be. So there could be a situation where China and US both could benefit. And that's what I think the market is telling you. When I showed you that slide where Chinese market has seen $10 billion, first of all, they are damn cheap. Absolutely cheap market, lot of value. There are many stocks which are, as liquid, 8 to 10% dividend yield. I'm not kidding, okay? Maybe even more. And absolutely scorching pace of growth. EPS growth, cash flow growth, everything going for them. I think that's one market which I believe is going to do well. And I think I personally tell people that in India, that if whatever is legal, whatever you can invest under LRS, you should invest in that market.
Thank you.
Okay, so thank you so much once again. Abu Dhabi, it was brilliant to be here, lovely to be here. And thanks a lot for your hospitality. And thank you for the team for arranging everything for me. Hope to be back among you in the next chapter as well, or the next conference as well. Thank you so much.